Welcome to the Due Diligence Podcast. I'm your host, Robert Kraft, and for more than 10 years with SNN, I've been doing interviews with MicroCap management teams at investor conferences globally as well as online. Our SNN Live CEO video interviews are meant to pique interest, and then one can discover more by going to that company website. But personally, I always have more questions I want to ask. On this show, I'll be chatting with public company executives from microcap companies, and we'll dive deeper into companies that are rarely profiled. Microcap traditionally is overlooked, unloved, and absolutely never featured on legacy financial media outlets unless something material is going on. That's a good story. With my experience interviewing management teams, having interviewed most of them before, I've built up a network of companies, so there will be no shortage of content. Furthermore, this is an opportunity for me to showcase some of the qualitative lessons I've learned from guests on the Planet MicroCap podcast. You can expect high-quality interviews with management teams that may have exposure to broader macro trends that you may never have thought of. One of the many reasons why I love the microcap space. So if you love microcaps and especially love learning about companies before the professionals do, let's start our due diligence. This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast. My guest on the show today is Robert DeLoren, CEO and Chairman of XELB Brands, Inc. It's a publicly traded company. The symbol is XELB on NASDAQ. XCEL Brands, Inc. is a media and consumer products company engaged in the design, production, marketing, live streaming, wholesale distribution, and direct-to-consumer sales of branded apparel, footwear, accessories, fine jewelry, home goods, and other consumer products, and the acquisition of dynamic consumer lifestyle brands. This is a company that doesn't put out a whole lot of news other than your standard Qs and Ks, and yet has done the conference circuit, and I've known about it for some time. So I wanted to take this opportunity to learn more about XCEL Brands from Robert, as well as key takeaways of the recent Isaac Mizrahi transaction, his opinion on what the future of retail looks like in 1 to 3 years, and what is live streaming and why is XCEL so excited about this opportunity. With that, please enjoy my conversation with Robert DeLoren, CEO and Chairman of XCEL Brands, Inc. Welcome to the Due Diligence Podcast. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And joining me today is Robert DeLoren. He is the CEO and Chairman of XCEL Brands. It's a publicly traded company. The symbol is XELB on NASDAQ. Robert, thank you for joining me today. How are you doing?
Thank you, Bob. I'm doing well and happy to be here with you.
It's great to have you. I got to tell you, I appreciate you calling me Bob. You know, I'm gonna get some SEO as Bob Kraft just from this interview alone.
So it's interesting. You started with Bobby, and most of my old friends still call me Bobby. So
I always say Robert professionally, and then when we're at the bar, it's Bobby. Yeah, I try. You know,
understand.
So I've known XCEL for a while. We're literally just saying offline how I've seen the company present at a number of financial conferences over the years. So this is a real pleasure for me to finally get a chance to interview and learn a little bit more, just, you know, in this kind of format. So to start us off, you know, what would you say the company does in that one sentence that best describes XCEL?
So it's actually very clear, and it has been since we started the company. We are a media and consumer products company that has a very simple mission to reimagine shopping, entertainment, and social media as one thing. Now, that is one sentence that says it all, but there's a lot in between all of that we do to actually design, bring products to market, fulfill to customers, whether it's wholesale or DTC. But at the core of what we do is most of our sales happen through live streaming, whether it's on interactive television or today on small screens on our own live stream platform.
Very good. No, hey, look, we are about to dig into it, so I'm glad we were able to get that one sentence. So let's also take a step back here. Can you provide us that overview and history of the company? What was that original problem that Xcel was looking to solve?
So we started the company about 12 years ago, and we saw two very disruptive forces that were impacting the industry back then. And this sounds silly, but e-commerce was just emerging. There were a lot of CEOs in the consumer space that actually believed that people would never buy apparel over e-commerce platforms back then. And there was this new thing that was beginning to happen, and it was called social media. And we had a sense that these two forces coming together were about to change everything. And we formed this company to be a solution provider in what we saw as a new channel of distribution, and very, very early on, social commerce coming. Now, like most things, it took a lot longer for social commerce to get there, but it's actually happening now in real time at a very rapid speed.
So how would you say that initial thesis has changed over time?
So, there were a couple of things that we thought about as we began to think about, well, what are the implications of this new thing, social media, and how will that change the way people think about shopping and, in fact, shop? And the conclusion that we came to back then is we were going to move into this cycle of see now, buy now. And certainly that has happened. With that, to succeed, you need a very fast supply chain. That's why companies that are manufacturing goods, say in China, and shipping direct here to the US are winning, because they have fast supply chains and they're shipping goods direct to consumer. It's a little more challenging to do that here in the US because of the long lead times in supply chain. So we did a little experimenting with supply chain speed and built a fast to market capability about 4 or 5 years ago. It cost millions of dollars to set it up, and tried to bring that to the department store channel. And for many reasons, we realized that it just couldn't work in the department store channel, given the way they operate, the way they're set up. Most department stores can't ship individually to stores. So you have to go from, say, a distribution center, either overseas to their DC, or an interim distribution center that you would bring the goods in yourself. And there was too much time lost in all of that. They're just not set up really to do it. And the change in the strategy over the years has been, we knew that we had to do everything to get direct to consumer and just do it ourselves. And probably the best example of this type of setup being executed best is by Shein. They have, for the most part, 2 to 3 weeks lead time on product. They're shipping duty free out of Hong Kong, and that is the setup. We have our own version of that. We are setting up in Tijuana, where we can ship duty free, regardless of where the goods are made, to any consumer, so long as the purchase price is less than $800. And we see that as a competitive advantage, at least over the next 2 to 3 years, because very few of our peers are setting up to do that.
Got it. So I want to understand the company's business strategy a little bit, because when you first go on XCel Brands website, or people first think about it, they think of all these brands that are under the Xcel banner, right? So what was that initial brand that kind of launched Xcel into kind of the public eye that people really knew? And then what was kind of the strategy with adding on all these other brands within Xcel?
So It's interesting. There's been some confusion about what is Xcel's actual business model, because I'm probably best known as the guy that recapped Candy Shoes and created Iconics brand group with Neil Cole. And when we started Xcel, most people thought we were a licensing company, and it's never really been that. We're a full service consumer products company. We design, we can import goods. We have different business models under which we supply various different channels, but we're really more of a vertical operating company than a licensing company today. So I think that has created some confusion from the outset about what Xcel actually does. And then if you think about what was the one that launched us, it was Isaac Mizrahi. Isaac is truly one of a kind. He's a true Renaissance man, a creative genius. He's a playwright, he's an author, he's a designer, he's an actor. He's really very unusual, and there's tremendous awareness for Isaac, 86% awareness amongst women in the United States. And the company was troubled when we acquired it, and it was a very quick turnaround. We approached QVC, where he was distributing at the time, and struggling with a new way to think about the business. And we never looked back for a minute. The business took off. It's now one of the leading apparel brands on QVC, largest audience share. We're always ranked number 1 or number 2 on the network. So it's been a great run with them, and great partnership. We've done many transactions with them, and they're true collaborators, great partners.
And speaking of which, because I might as well ask it now, because the company recently announced on, I think it was May 31st, 2022, that WHP Global acquired a controlling stake in the Isaac Mizrahi fashion brand from Xcel. So can you give us a little color on this transaction and what this means for Xcel?
Yes. So, first, this was not a transaction that we were in the market. There was no process. It was an unsolicited offer, and the offer was good for us and good for WHP. I've known the CEO of WHP for many years, and they were looking for a brand like Isaac and needed to have an operating partner stay in to run it, particularly with something as specialized as live streaming. Its concentration at QVC. Coming into this current economic cycle, we thought it would make a lot of sense for us to take some chips off the table, delever the company, get positioned for strength or with strength on the go forward. And now in retrospect, it was one of the smartest things that we've done here. It's been great for the WHP guys, good for us. There's a tremendous opportunity for us now with HSN, and we needed capital for all the new programs that we're launching there. Soon you will see a series of announcements about what we're doing there. And so it all happened at just the right time.
Absolutely. Because was one of the key takeaways when, like anybody that goes in and looks at, take a quick look at income statement and everything, like since once pandemic hit, it for all intents and purposes, it was rough, right? Like,
no question, Bob. It's the company was profitable from day one. Mm-hmm. And we had consistent earnings. COVID hit us. It was hard. It was hard on QVC. QVC had additional complications during COVID in that a major warehouse facility burned to the ground. which made logistics even more complicated for them, which caused a loss in sales, particularly in the Isaac brand. All of our inventory was in that warehouse. It's not the case with another large apparel brand that we have there called Lori Goldstein. That with the absolute just zero sales happening in all of our other non-essential retailers, it was a really challenging time, hard getting people in the office. And if you're not in the business, it is not easy to run a creative process, which is 80% of the engine here, remotely. And it was a challenging time for sure. And we're still feeling the implications of COVID, because it isn't over. What's happening in the market today is a lot of retailers and wholesalers tried to get ahead of the delays in production and chased inventory, maybe over inventory. And now we've all sailed into this economy that looks like it's going into a recession. I'm still not sure if we're in a recession or not, because there's no definition for it anymore. But it sure feels like we're heading into a recession. Things are slowing down, and the challenges that come with that is retailers are cutting orders, canceling goods, and we're just all dealing with it.
Absolutely.
Yeah.
No. Actually, this was another rabbit hole I wanted to go down with you. You know, just talking about the industry as a whole and how retail is, like you said, it is going through this challenging period. So, what do you think the future of retail looks like in the next 1 to 3 years, and how is Xcel positioned for this new retail environment?
So, the last 5 years has presented tremendous change and disruption in retailing. And the acceleration of change is increasing literally every day. And it looks like the new next channel of distribution, the new big disruptor, will be live streaming and social commerce. And that's going to come in various different forms. If what's happening in Asia is any indication, live streaming in 3 years has gone from nothing to 20% of all e-commerce. And that's likely to happen here. And it's interesting for me to see 12 years ago when I spoke to CEOs at major department stores, and I asked a question about e-commerce, they would all say, no, it's not important. People aren't buying apparel on e-commerce. It's good for household goods like toothpaste. And here we are, we're hearing the same conversation about live streaming and social commerce. But it's coming for sure. People are tired of looking at static images. They want more information. If that wasn't true, YouTube wouldn't exist. And today, I have a couple of newborns, and when the stuff comes and I have to put it together, I don't even bother looking at instructions anymore. I go right to YouTube, because you can find anything and everything you want, and there's someone showing you how to do it. So the same thing's happening with shopping, and everyone's experimenting with it, trying to figure it out. Amazon recently announced that this is mission critical for them. And it's hard to tell. Some are dropping. Facebook just discontinued it because Facebook doesn't have the ecosystem to win at it. The reason it's working in Asia is you have companies like Alibaba that have the entire ecosystem. They have product, they have fulfillment capability, they have the technology, and they have the audience. So that works. And the challenge for most retailers, because they are not media companies, they don't understand how to build audience. And we are, as a company, advising some major retailers, one in particular, and we're trying to get them to think like a media company and act like a retailer, because the tech that it takes to execute this is part of it, but the rest of it is understanding how to produce the shows and how to build audience, how to create a destination that people actually want to come to, whether it's weekly or daily. And that's something that the interactive television networks like HSN and QVC have been doing incredibly well for many, many years. And of course, they're owned by media companies, so they know how to do that.
For sure. So, okay. So let's break down what you mean by live streaming. Like I could, I obviously I've tuned into live streaming on YouTube.
Live streaming there's two components to it. There's, in the version of live streaming that is designed for commerce, there is an intent for someone to come to that live stream for the purpose of learning about a product, being entertained by the presenter, and buying, not watching a show and you can click to it. The technology has to be one click and not navigate the viewer away from the show. So you're watching someone presenting product. On the right side of your screen is the product. You click on it, it goes in your cart, but you're still watching. And that is very different from clicking at the bottom of your screen and buying something while you're watching a show, because there's no one telling you about that product. You're just seeing a visual on it. Or you may be seeing it on a celebrity on the show, but they're not explaining the product. So it's a very, very different process of selling. And some of the production tricks, if you will, is to create a sense of urgency and a fear of missing out when you're selling. FOMO is a very important part of selling live, and it is working well with streetwear, because streetwear is designed as drops. We're dropping today. There's only 500 units available. That's it. Everyone knows, and it's a bidding war to get it. It's sort of like when Ferrari or McLaren or any one of the supercar companies drops a special car. There's always more people trying to get that car than there is available in the production line. So it's knowing how to do that, and it's creating a destination for people to come and shop at a given time, to see someone that they really like watching, and give them an opportunity to buy something at a great price. So those are the keys to it, and that seems to be missing from what a lot of people are doing out there experimenting with this. They just don't understand the fundamentals of making this work. There is another version of live streaming, and that's not really commerce driven. It's more informational driven. So it could be a podcast about your product, or it could be a video that is storytelling about the company and the product. And those types of live streaming events are designed more for branding and for customer engagement and customer loyalty building than actual commerce. And to win today and to think like a media company, you have to do all of those.
Absolutely. So, it almost sounds like it's taking that QVC model into the 22nd century.
Correct.
Right?
Yes. And quite frankly, QVC is experimenting themselves now with live streaming over small screens.
So what tech is it that people are using? Is it through YouTube, or is it through something else?
No, actually there are companies that are emerging, and there's been a lot of capital invested in live stream technologies over the last year. Last I read, over $9 billion. There's a company called Bambauser out of Sweden. They have the video technology, but they don't have the social commerce piece of it. And then there's Talk Shop Live. They're building audience. They're having great success in music and less in consumer goods, but they are building a destination, and they do understand building audience. They too only have the video piece of it. It's the one-click video piece. The pieces that make it work, and we've built this entire tech stack, is for the most part, over the last 100 years, retailing has been about the one to the many, including QVC. Social commerce is about the many to the many. And that's what's going to ultimately change and disrupt retail again going forward. And the technology that you need is you have to have the ability to enable the one and the many to create content. And then you need the technology, sort of like affiliate technology, that can track attribution, so that if Bob wants to make a video about Rob's product, I can pay Bob a marketing fee for anyone that Bob forwards the content to. That gets a little more complicated than just having technology that can stream video. We built that with our Longaberger brand. And we've been working through the technology, perfecting it, debugging it. We have over 5,000 nano influencers that earn extra money, marketing fees, for doing nothing more than inviting people to our live stream shows.
I got to ask you, because I go on the company website, I go to our investor relations, and yeah, it says right there, a live streaming company. But people must get confused about that all the time from an investor perspective. Like, wait, what? You got all these brands, but you got this tech component. Like, what? I don't understand. I mean, does that must come up all the time?
It does. And we say that, we are a company that has been evolving around this idea of reimagining shopping, entertainment, and social media. The live streaming technology that exists today, most of it has all come about over the last 2 years. And going back 12 years ago when we started, we had a massive television studio on 10th Avenue in New York City. It cost $3 million to set up, lighting, sound, raised floor. It was wildly expensive, satellite trucks on the street whenever we did a live show. Today, it's an iPhone and a ring light, and you can do it anywhere. It's technology, as it evolves, it makes things much more efficient, typically, and that's what we're seeing. So true live streaming over new technologies is something that we really started doing about 2.5 years ago when we acquired Longaberger. And the reason we targeted Longaberger was because Longaberger had 100,000 saleswomen before we acquired it. Unfortunately, the company went through a bankruptcy, but we knew there was a community, and we knew that we could build audience around that community for live streaming. So that's why we made that acquisition, and the business is going well for us. The tech is built. Now we're going to take that tech stack and begin to use that for our other brands.
Got it. Okay. All right. So this is actually, I'm glad we're having this conversation today so that we can clear, because I'm almost positive there's folks that are listening to this that maybe have heard of Xcel and be like, oh, now I see what's going on. Now I kind of see where we're going here. But even taking a quick step back, because right now you have the number of brands that you have on your website right now, is part of the growth strategy now saying, hey, look, here's the brands that we have the tech for live streaming. Here's some of the sales that we're seeing as a result of having built this community and the tech for it. Now are you trying to attract more brands within the XCEL Brands infrastructure, or is it now working with just existing brands on licensing deals and licensing the tech, or bringing it, like what's the strategy now moving forward?
So the strategy is, first, how do we grow our brands? And what the live streaming platform can do for us is it can bring us live on-air guests that we could not get before because of geographic challenges. One of QVC and HSN's challenges prior to COVID was it was hard for talent to go either to Tampa or Westchester, PA. They just didn't want to do it. And we can do live shows now from anywhere. So it's changed the playing field for people that are willing to actually do it now. And some of the new announcements that we are about to make are with either designers or television stars that have 5-10 million followers, highly engaged base of followers that are credible, authentic voices in whatever a particular category is, that we now can team up with and live stream, and they could do it from their boat, their house, their car. Literally, you can do it from anywhere now. And the more real you make it, the more engaging it is.
So what does the competitive landscape look like? And in particular, what's the moat around building? Like how hard and difficult is it to build this live streaming technology? Can any of Xcel's competitors create a similar type of tech and now just have all their brands pushing it out to whatever communities they build there?
So there's a couple of pieces to it. It's one, you have to have the tech, you have to know how to produce the shows, and then you have to have the ability to fulfill product and get it to the customer fast. So if you have that whole ecosystem, that's the unfair advantage. And if you really understand trade rules well, now the real unfair advantage is if you can bring goods in either from Hong Kong or Canada or Mexico, duty free to the consumer, so long as that sales price is under $800. That's the big win. That's the new model that's going to work. And there, of course, you're working on vertical margins. So we've spent millions of dollars over the last 2.5 years building out the tech piece of this. And as a company, I can't think of anyone else that can say they have over 10,000 hours of programming time over the last 10 years doing this, selling this way. We know what works. We know how to produce the shows, and I think we're positioned better than most for what's coming.
For sure. So my next question, I asked this to everybody on here. So we talked about the opportunity. We talked about some of the exciting things that are coming and that the company's been working on. But in your opinion, just play devil's advocate here. What would you say are some of the company's downside risks?
So it's a good question. When you look at our balance sheet, I think we're positioned well. Company has zero debt. We don't even have working capital debt. We finance all of our own inventory and AR. That's likely to change because the wholesale component of our business is growing, and it's actually more efficient for us to get a working capital facility in place. And we have a lot of cash and AR and current inventory. We're positioned well, given all the disruption that's going on from a balance sheet perspective. That said, this year, like most, we have our challenges in the wholesale business, retailers canceling orders, factories delivering late deliveries, open the window for more cancellations. Everyone's dealing with this in virtually every category. So everyone is, dealing with all the supply chain disruption and late deliveries and retailers doing everything they can to reduce their inventories, not take any more goods in. But we're in a very good position. One, to grow our brands as things begin to normalize. I believe what we're going to see is retailers are not taking inventory, reducing inventory everywhere, almost everyone, from Target to Walmart to Macy's, even QVC, all over inventoried and managing through that at the moment. Of course, margins are compressing as they discount goods to move it. But I think what's going to happen is as we go into January, then it's going to be sort of the opposite. Oops, we have to chase goods. So, as a supplier, it's how much risk do you want to take on the oops, and will the economy come back? Which is you don't want to be in the same position the retailers are in, where there's no inventory available to sell them when you know it's pretty likely that they'll be chasing goods. So we're making all of those decisions in real time. I would say, despite great balance sheet, there's nothing in this world without risk. But the one thing I've learned over the years as an entrepreneur and the CEO of a public company for many years, when the economy is tough and there's a lot of uncertainty, particularly geopolitical uncertainty, it's a great place to be when you don't have debt.
Amen.
Yes.
Amen to that, for sure. Hey, Robert, I usually ask this earlier on in the interview. I can't believe I'm saving it till now, but you alluded to a little bit about your background prior to founding Xcel, but give us some more. What were you doing before that?
So I actually started my career on the consulting side. I started at Deloitte, and I left Deloitte and became an asset manager for the Kuwaiti investment office. And then found myself at Prudential Securities, underwriting bonds backed by intellectual property, and did all the early music deals, film slate deals, and did the first trademark deal. And it was for a designer named Bill Blass. And I became fascinated by the industry and decided that we would start buying consumer products companies, and had an opportunity to recap Candy Shoes and create Iconics. And that company was formed to solve a problem that existed at that time in the marketplace. And the last 20 years has been about buying consumer products companies, finding disruption and solutions for what the industry was facing.
Very good. All right. I only got a couple more questions for you, but from what you can tell us, where do you see the company in 3 to 5 years? And what would you say are some of the inflection points that'll get you there? So
our biggest challenge now is adding volume into our wholesale division. There's a lot of overhead. It is a bit of a field of dreams. You have to build it and they will come. It just takes a minimum amount of people to actually design, source, warehouse, and do all of the things that it takes to bring products to market and actually get them delivered to a customer. And there's 2 ways we can do that. We can grow organically, which we are doing with our brands, and or acquire it. And we are certainly looking for an opportunistic acquisition. As a company, we have acquired something just about every 2 years. And we expect that we will continue to do that. And we have in the pipeline now 4 or 5 transactions with our current brands that will add the volume that we need for our wholesale business. It is all powered by live streaming, either on interactive television or other channels powered by our technology. And we would expect over the next 5 years, the goal is to add between 30 and 50 million of sales volume to the company each year over the next 5 years and drop 12% of that down to the EBITDA line. Once we pass, say, 40 million of wholesale volume. So that's the inflection point. That's when it really starts to translate into strong earnings.
Absolutely. So you've been a public company now for a while. How much, if at all, have your shareholders or potential shareholders or folks that are been in the company for a long time or own shares in a long time, how much have they influenced your decision-making process, if at all?
So that's an interesting question, and a bit more complicated for me than most public company CEOs. We are a closely held company. Insiders control about 67% of the business. I am the largest shareholder in the company, and there are several other large shareholders that are insiders. And we, of course, are all, we have a goal of enhancing shareholder value. That's why we're all doing this. And it creates a different level of conversation and pressure when it's your insider saying, okay, what are we doing? Where are we going? And it's never been a sprint for us. We knew this was a marathon. If you really look at the great companies like Michael Kors or even Kate Spade, those companies took 15 years from start to when they really became big companies. And we've all had that view. And then we have the normal sort of alignment that we have to have with the shareholders who are not insiders. And I would say that, like most good entrepreneurs, I'm a good listener. I listen to what everyone has to say. I've always kind of led this way. It's a bit of a Jesuit approach. I don't care what you believe, just tell me why. And if it makes sense, I'm going to listen to it and probably do it. So we do have shareholders that have great insight and great comments, and I take those, and if I don't agree, I'll say why. That's the Jesuit approach. I would say that anyone that's been running a company of any size, if you're not open to listening to suggestions, I think you're limiting sort of your ability to see what's out there that may be coming that you missed. So
there you go. All right. So to close us out here today, this is the same question I ask everybody to close out here. How would you rate your experience being a public company CEO? It's not an easy job. You got to deal with a lot of extra than private company CEOs. So what's this experience been like for you?
So I've been doing it a long time. It's not my first time. I would say that being an entrepreneur and being the CEO of a public company, neither one of them are an easy thing to do. As an entrepreneur, you're often risking everything and working 24/7, 365. And being the CEO of a public company is very similar, except you have the added pressure of having a shareholder base that you're responsible for all of the actions that you take. So it does create a different kind of pressure, but it's still very similar pressure to what owners of private companies have. It's not for everyone, but it's something that I've been doing for so many years. I've become sort of accustomed to it. And if you believe in what you're doing and you love what you're doing, the pressure's not so bad. If you don't really believe it and you don't really love it, I don't know how you could do this.
So Robert, with that, where can our audience go and find more information on XCEL Brands?
So best way to find information on us is to go to our website, www.xcelbrands.com or .gov.
Very good. Well, Robert, thank you so much for joining me today. I really do appreciate it. Good luck. Stay safe. And I look forward to our next update.
You too, Bob.
This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast.